you're just starting to see now these prominent Wall Street individuals start to understand Bitcoin, or at least start to publicly change their tune around Bitcoin. Do you see those developments as like everything's good for Bitcoin, or do you kind of want them to kind of hold off so that individuals have more time to stack sats? Do you think there's any perceived threats around these big banks starting to get involved with Bitcoin? Like, how do you kind of view these developments?
Well, it was inevitable, of course, that Wall Street would get into Bitcoin. And, my background is mostly in Wall Street. So my introduction to Bitcoin and the way I saw Bitcoin from the beginning was from that perspective. So I wasn't coming to it necessarily from the technological front, and I wasn't to it necessarily from the philosophical angle. I saw it. And my first question back in 2011 was, is this an asset class? Because if it is an asset class, if it's a new asset class, then the potential is enormous because there's 100 trillion, $200 trillion worth of investable assets around the world, and they're very competitive with each other. The hedge fund industry, the private equity industry, they're extraordinarily competitive, and they're all looking to, get the edge on the other guy in the industry. And if Bitcoin enters that arena as an asset class, and you have hedge funds starting to outperform based on their Bitcoin position, you're going to have this huge groundswell of capital moving into Bitcoin. And I think that's the stage we're at now. So when a BlackRock or some of these other big funds, Paul Tudor Jones was, I think, probably the first hedge fund to mention
Yeah.
Bitcoin in a big way. And so when it becomes recognized as an asset class, and if you listen to Larry Fink and these people on Wall Street, they, the phrase that they use will be, well, we see it as an asset class. So that's like a green light that says, um, we once it's categorized as an asset class, we have nothing to do except position ourselves in this asset class. Either we're going to be a small position or a big position, but we cannot ignore it. We cannot not have a position. And so even 1% of that multi-$100 trillion fund funds available, moves the needle on Bitcoin. It moves it up considerably. So if you get into the 5 to 10% range, and then you start to see it really race ahead to those very, very seven-figure type predictions that people have been making, including myself, for years, because it is an asset class. Now, on the flip side, you have what we saw in the gold market, which is that the ability to control price discovery and manipulate prices is real through the derivatives market. So the price of gold has been lagging inflation for 20 years because the governments around the world don't like gold making their fiat money look bad. So they make it easy for huge funds to manipulate the price of gold and to scalp and to continuously skim profits off gold, which is what they do almost every day. You can watch it and see it. It's pretty clear. And they are very good at keeping the price of gold and silver down. There are something like, for every ounce of silver, there's probably 50 ounces worth of derivatives floating in the various exchanges around the world that are used to keep the price of silver down, because governments don't want gold to race ahead and to draw capital out of their fiat money scam into gold. With Bitcoin, we have the ability to pull our private keys, which is not really available in gold. Technically, people can take delivery of gold on these exchanges, but there's never been an organized attempt to do so. We tried to do it a few years ago with Crash JP Morgan Buy Silver, because after the 2008 financial crisis, when JP Morgan ended up buying Bear Stearns effectively for nothing, they inherited this huge multi-million short silver position that Bear Stearns was managing on at the behest, presumably, of the government. The government likes to stay involved. And so I did some calculations, and it became clear that if this short position wasn't covered, and the price of silver got to $60 or $70 an ounce, it would bankrupt JP Morgan.
Hmm.
So we started this crash JP Morgan buy silver campaign, and we got the price from 15 up to 50, which was the old
Wow.
uh a bunk, the bunker, what, the Hunt brothers. The Hunt brothers
Yeah,
got
yeah.
a
Back in
price
the
up to
'80s.
in the 80s to fill the into the $50 range, and they were cornering silver. So we got it back up to the old Hunt brothers $50 level, and then the feds, of course, came in and they changed the laws overnight to make it possible for these banks to have and carry much greater short positions in silver. So they printed up a lot of paper silver derivatives, and they stopped the run on their bank,
Hmm.
and the price went back to 15 or so. So we've seen that it is possible to force capitulation in the silver market. Um, but at the end of the day, because the ability to pull private keys is not like it is with Bitcoin, I don't think it will ever succeed. Whereas with Bitcoin, you can pull your private keys, and that is what the late great, I shouldn't say late, but the former Bitcoin superstar Trace Mayer started a campaign that on January 3rd of every year, people would pull their keys off exchanges as a way to maintain integrity and to prevent these derivatives bubbles from building up to excessive price manipulating levels. That was, just to give a shout out to Trace. I mean, before, Michael Saylor, everything Michael Saylor says about Bitcoin in terms of an asset class, Trace Mayer said first, starting, he was a buyer of Bitcoin at
Definitely.
25 cents, and going back to 2010, right? And then but he's another example of somebody who disappeared. One of
Yeah.
the OGs who disappeared, and that's kind of an interesting story as well. But yeah, you're right that when you have huge money in these markets, they have the ability to manipulate price. And but a couple of things I think with Bitcoin, because it in order for the gold suppression scheme to work, you really need cooperation amongst all the bullion banks. So there really is a gold cartel, and the risk, of course, whenever you have a scheme like that, is that you have if you're short, obviously you have a risk on the upside. And but with gold, under the best case scenario, even let's say a war is started, and we've already had a couple of examples of that. It didn't really have much of an impact on price, but I mean, what we're saying the price maybe could jump 10, 15, 20% with gold. You're risking 10, 20% on your short position to skim, 1% every couple of days in perpetuity, right? So that's a risk these banks will take. But with Bitcoin, you really, if BlackRock or the Saudis or somebody came in and said, we're putting an order in for half a trillion Bitcoin, and the price goes from 30,000 to 120,000, that's a huge move, and you're going to get wiped out if you're short. And so it's going to be it's going to be difficult to maintain an anti-Bitcoin price suppression cartel, because the upside is just too incredible. It's you're talking millions of dollars a coin, and so there will always be at least one of these players to drop out of the cartel. You won't be able to get a cartel organized. So that's one thing that Bitcoin has in its favor. Additionally, it's easy to pull the keys. And then thirdly, you just have in the background the ongoing collapse in fiat money world. I mean, the fiat money world is really at the end of a 300-year period or experiment, going back to the creation of the Bank of England, and this idea that fiat money could work. I mean, we know after 300 years that it never works. They all go to zero. None have ever survived, or they're lost 99% of their purchasing power. So I think we're entering a new epoch where the fiat money is going to be history. The CBDCs that are coming up by central banks are just an attempt to reinvent fiat money, and it's not going to compete with Bitcoin. People are going to see Bitcoin as the path away from centralization, CBDCs, and everything else that comes with it, and they're going to continue to embrace Bitcoin as a way toward economic freedom and just freedom in general.